Hello, Jarrett Lau here with Boston HOA Management. Some of you may or may not know, but I actually own an insurance agency and I cut my teeth in that business. That means I was learning everything from insurance from the time that I could crawl, walk, lick an envelope, and file a folder. So what that means is, as a property manager, we're able to provide a whole different level of insight when it comes to your master policy as well as the insurance to your unit owners. We want to provide today a hint and a way for you to save additional money. Now, no matter what, if you ever change an insurance policy, full disclosure, make sure that you're letting every single unit owner know about this, because you don't want to change your policy, change your coverage, and then the unit owner not be aware and there would be a gap. And then when there's a loss and that gap occurs, you, the board of trustees or the management company, might be liable for it. So communication of any changes that occur. One of the biggest expense is the deductible of a insurance policy. And when I say an expense, it's not the direct expense, but when a loss occurs, you have a deductible amount. The deductible is the amount that you pay as a building or a unit owner towards that loss. If it's lower, say $250 or $500 or $1,000, more losses can occur because it's really easy for a unit owner to say, hey, my loss is above this, I'm gonna have the master policy kick in. And that's the way it works. If you have a unit owner policy, it's only gonna cover you up to the master, and the master's policy is gonna kick in. We don't want that. We want to set that master policy as high as possible, the deductible that is. That way, if it's $5,000 or $10,000, the unit owner's policy might be a little bit more, but the actual policy for the building will be less. And that means that less losses occur, and less losses is a good thing. If you have too many losses at a building, you're gonna get kicked into bad rates, what they call surplus lines, right? Non-voluntary, and you don't want that. Maybe the premium's higher, the coverage isn't as good, right? Just not a place that you want to be as a condo association. The higher the deductible, the lower the premium, the less chances for, or less opportunities for owners to make small claims on it. If you have a policy that has been clean for 5 years, is typically what they ask of, you're able to requote that out all the time. Whereas the opposite, if you have claims all the time, no carrier is going to want to quote that out, and then you're going to be stuck in that surplus lines market. So if you or anyone else you know is looking for a proactive property manager to be able to explain to you insurance policies, master policies, look through it, see what type of coverages and pricing that you have to be able to save money, because sometimes insurance policies are a huge line item of your budget, please think of Boston HOA Management, where you get more than a property manager, you get peace of mind.